KW says, "Hi, Austin and Robert. This is KW, and I've been listening to you guys for the last year or so, and I love your ideas. My wife and I are at a point where we're confused on what to do next. After listening to you all, I feel as if we could do a lot more for building for our retirement, but I want y'all's take. We are in our early 50s. My wife works for a company making about $60,000 a year and contributes 15% to her 401k. Her account currently is valued at $420,000. I am self-employed, profiting about $100,000 a year, and I contribute $16,000 a year to my SEP IRA through a brokerage firm, which right now is valued at $225,000. We have a paid-off house, which is valued at $850,000. We have no other debt. We have $115,000 at a 4.5% interest rate in a CD and $140,000 in a high-yield savings account. Can you please give us some ideas as to where we can disperse our money so that we can make it work harder for us? Thank you for all you do. KW." Robert, I feel like this question's right up your alley.
Yeah, I love you guys are in a great situation. I feel you're too heavy in cash and too risk off. So my first glaring change that I would make is either when the CD matures, I would get that money working maybe in some crypto, some precious metals, in more of the funds that we talk about like VOO, AIQ, QQQ, some of that. But also I feel like you're really heavy in your high yield savings account as well, because with 140,000 sitting there making 3-4%, I think that's too risk off also. So I would look to getting a traditional brokerage account moving if you don't have one. Get some of this money out of the high yield savings account. Get that down to maybe 3-4 months of your monthly bills for your emergency fund, and everything else gets working in the market. Because being in your early 50s, if you really accelerate your growth with this $200,000, $300,000, $400,000 on top of the SEP and the 401k, you're going to see magical returns in the coming years. And you guys have another 15 good years of investing before you're fully retired. So that's what I would do first and foremost. Get a little more risk on, get some money into crypto, get some money into maybe some precious metals, these ETFs and index funds we talk about, because you don't want to be sitting on the sidelines so heavy in cash through the high yield savings and the CD.
I love that breakdown, Robert. Let's give them some, like, here are the real numbers, right? You've got $860,000 at your disposal to invest. 420 plus 225 plus the 115 that's sitting in the CD, plus 100 of the 140 in your high yield savings. We're gonna keep 40, be my guest. You guys are rich, you're fine. Go put 40,000 in your savings account. I'm cool with that. So now we're talking about $860,000. The stock market doubles on average every 7 years, right? That's that 8, 9, 10, 12% that we see in the S&P 500 and the NASDAQ. If you guys are in your early 50s, you're 52 years old, maybe 53. Let's say you've got 7 years until you're 60, and then another 7, you're 67. That's 2 more doubles of $860,000. That's $3.5 million by the time you're in your mid to late 60s, ready to truly retire. I mean, you guys, if you wanted to, you probably could retire early depending on how much money you want to live off of, especially with a paid off house. So I love where you're at. I love that you guys have built such a wonderful nest egg for yourselves. Now it's time to move away from the conservative type of investing and just collecting a little bit of interest to getting aggressive. Think precious metals, think the S&P 500, the NASDAQ, the MOAT, VTI, VGT, VUG, AIQ, right? All these index funds and ETFs that we talk about here on the show that, I mean, just gold is up 40% this year. Like, imagine if you just put your money in gold. So all I'm saying here is there's a lot of great ways to invest this money. If you want to put a little bit more into the SEP IRA, that's cool. Make sure your wife's 401k is invested correctly and not sitting in some silly target date funds. But beyond that, go open up a brokerage account on Public and just deposit a couple $100,000 between your high yield savings and the CD and all the other fun money you guys make, and you're going to be just fine.
I love it. Yeah, there's just so much they can do to get better diversified, a little more risk on, and produce so much more money for retirement in the next 10 to 15 years.